Hey, what's up, stock compounders? Brad here. Today I want to talk about Warren Buffett. Is Warren Buffett overrated? Is he out of touch with the realities of business today, the stock market today? There's a lot of people who are talking about his airline choices, how, he owned the four major U.S. airlines, and kind of towards the beginning of this pandemic, he dropped those. He sold off all the airlines. And there's, also people talking about how, he doesn't really invest in tech companies. Some of his peers at Berkshire Hathaway are buying tech companies like Amazon and others. But Buffett really sticks with businesses that he understands, okay? And tech companies are difficult for Buffett to understand because he didn't grow up with technology, right? He really grew up understanding, railroads, big consumer companies like Johnson and Johnson, retail, these kind of brick and mortar businesses is really what Buffett learned how to value, learned how to understand early on. But before we get into much of that, I want to talk about Buffett's track record, okay? So Buffett started buying Berkshire Hathaway stock in 1962. He started buying shares of Berkshire Hathaway at $7.60 per share, okay? The stock today in 2020, I just looked it up, it's at $267,000 per share, okay? So over 58 years, the stock went up 35,000 times. That's a 20% annual rate of return, which is twice that of the market, of the US stock market as a whole. So he has an incredible track record in terms of outperforming the market. Based on that return from 1962 to today, that 20% annual rate of return, that's 16 doubles, okay? If you take the rule of 72 at 20%, you get about 3.5 doubles. It takes 3.5 years to double your money. That's how the rule of 72 works. So you get 16 doubles over that 58 years. Which, that's insane, guys. That turns $1 into, $35,000. So you can imagine if you'd put a substantial stake in Berkshire Hathaway when that got started. So there's no question that Warren Buffett is a fantastic investor over the long term. And that's really how I define proper investing. It's having a long-term kind of compound growth engine mindset. We don't know yet whether what he's doing with the airlines, whether selling those airline positions was smart or not. The only way we're going to be able to judge that is by waiting to see what happens to airlines over the next 3, 5, 10 years. It doesn't really matter what happens in the next month or even the next quarter or year. Buffett, he wants to own great businesses that are going to grow earnings over decades, right? So, it's way too early to judge his sale of the airlines. Is he overrated? I mean, the only way that I can kind of judge how he's done as an investor is to look at the entire life of his investing career. And if you look at that, there's pretty indisputable evidence that Buffett is one of the greatest, if not the greatest, investor of all times. Is he out of touch with the market? It's as a value investor, value investors really focus on minimizing the downside. okay? Because they understand if you lose 50% of your portfolio, you need a 100% gain to get back to even. That's why Buffett's rule number one is don't lose money, because it's you basically have to do twice as well to get back to even, which is very difficult to do. It's hard to dig yourself out of a deep hole in the world of investing. So value investors, because they really focus on the downside, on the risk of losing money and how to avoid losing money, when the market has gone up for a long time, we're in a recession now technically, but we had 11 years of a bull market since the last financial crisis. Now, when you have so much time in a bull market, value investors tend to lag. Okay, they don't do as well as investors who are taking more risk, using leverage, investing in companies where it's harder to predict future earnings, which technology companies are included in that. It's more difficult to predict what a technology company is going to be making in 10 years than it is to predict what one of these, Dow Jones Industrial Average companies are going to be earning in 10 years. A company that's been around a long time, they've been increasing their dividends every year. It's easier to predict based on past performance, kind of where they're going. Okay, now that's changing as I was reading somewhere back in the 60s. A company that was in the S&P 500 spent a lot more time in the S&P 500 than companies that are in the S&P 500 today. There's a kind of an accelerated deterioration of businesses. It's harder to maintain a long-term competitive advantage for as long as it used to be, because of the rate of change of technology and how technology is impacting businesses and the ability of competing businesses to take market share away from them through these technological advancements. So anyway, because of that more than decade bull run in the stock market, investors like Warren Buffett, who stick to their principles of buying a company when they can buy shares at less than the value, and only stick with companies that are within their circle of competence that they can understand, and not using leverage, not taking unnecessary risk in order to boost returns. Okay, so because of those factors, Buffett has looked like he's been out of touch in the last decade. He's lagged a lot of other great investors because he's sticking with his principles. But Charlie Munger once said, Buffett and Munger, they're going to invest, the way that they've invested, the way that's tried and true for them. Sometimes, they're going to face headwinds, like in these, long-term bull markets. They're going to face headwinds. They're not going to do as well. Sometimes they're going to face tailwinds, like when the market tanks, they've got all this cash, and now they can buy up companies with the cash at a steep discount to what the companies are generally worth in a healthy market. But they're just going to keep swimming. They're going to do what has worked for them over decades. They're not going to change their investing approach to suit, what might be working best today. Okay, because nothing is constant in the world of investing, and if you're engaging in riskier activities to try to kind of get the most out of the investment circumstances today, that tends not to bode well when things change, when the market goes south. If you're leveraged, if you're borrowing money to invest, it's going to help your returns. It's going to juice your returns when the market is going up. But, when the market goes down, it can knock you out of the game. So, Buffett, some would say he invests very conservatively. But if you look at his track record, you really can't argue with the returns that he's made for his investors over the last nearly 6 decades. So is he overrated? I don't think he's overrated. I think he's a brilliant investor. I think he's probably just as good of an investor today as he has ever been. Investing is really a pursuit where you accumulate wisdom and knowledge over time. You get better as an investor the older you get. And he still seems sharp to me. Is he out of touch? I mean, when it comes to investing, there's so many ways to make money, okay? You might look at investors who aren't invested in Amazon or Apple or Google or Facebook or Netflix, all of these great tech companies, and think they're out of touch. But you don't actually need to be invested in those companies to do amazing as an investor. I really learned that from Monish Pabrai. To be a great investor, the real key is to wait for opportunities that you understand, and you understand that they're a great value. And they can be tiny spin-off companies that nobody knows about. It's interesting how there's so many people who invest in companies like Tesla and Amazon and Google because they're sexy. Nikola, these companies that, you think they're going to change the world, and there's a lot of ego that gets into the mix. True value investing tends to be a very boring activity, okay? You're finding companies that are trading at a discount to what they're worth. Usually those are not sexy companies, okay? But you look at the balance sheet, you look at what the valuation as compared to the price, and you see the potential for profit. You see the potential for these long-term compounders in your portfolio. And that's sexy, quite frankly, to value investors. So it's a bit of a different mindset. The investors today, what I'm seeing investors buying on Robinhood, it's these swing for the fences stocks that could be the next great, Tesla, Apple, whatever. But they're really risky. The odds of actually making money with those plays, I think, are much less than the odds of losing money. Whereas, Buffett's strategy for, 70 plus years, as long as he's been investing, is to find companies where the odds of making money are greater than the odds of losing money. And those tend to be companies that are out of favor in the moment. They tend to be companies where people are fleeing from them rather than flocking to them. So that's Buffett's approach. I have a ton of respect for Buffett. If I had to guess, I would say the airlines, it's going to be a very sad picture for the next 3 to 5 years. People who are investing in airlines. So, we'll have to wait and see what happens with that. I don't think he's overrated. Do I wish, he understood better technology companies, or maybe tried to make more of an effort to understand technology companies for his investors? I imagine he's trying very hard to learn as much as he can about what's happening today, the technologies of today, and because he just has an unquenchable thirst for learning. So I'm sure he's trying to learn about these things. It is harder when you don't grow up with them. It's easy to take that for granted. Someone who really grew up with the internet. It's just probably something that's going to be a lot harder for him to fully wrap his head around. And, I think that's fine. Buffett is going to do fantastic without ever touching a technology company. So I'm not concerned about that at all. And like I said, I don't think he's out of touch. I think he's sticking with what he knows. I think that's a lesson that all of us investors can really take to heart. And yeah, I have nothing but respect for him. So that's all I got, guys. Let me know what you think of Warren Buffett. Curious to hear from you. Even if it's negative, I'm not going to pick on you or anything like that. I'm just curious, what your take is, and how you're seeing things in terms of the investing environment today, and what Buffett is doing in the markets. So that's all I got, guys. I will see you in the next video. Take care.